Hi and welcome to Trade of the Week. This week's trade features sterling dollar. Sterling has been everybody's favourite investment toy for the past 2 weeks, with the pound rallying from 157 against the dollar last week to short of 167 this morning. I've been happy to support sterling and was short of euro sterling up until today's GDP data. But this was one of those times when the build-up had me looking for the contrary trade. Although the consensus view was for GDP to rise by 0.2%, market talk yesterday was for a stronger 0.4 figure. It was only a rumour, but it must have helped stoke the fires of sterling's rise. This was what first prompted me to consider a short bet, my reasoning being that now the market might be disappointed if the number came out at the expected 0.2%. My normal trading strategy, using a 5-minute chart, triggered a sell signal at just after 9 o'clock at a price of 166.47. The price had dropped 10 pips through the 21 period moving average, and the RSI and MACD indicators had flipped over to the sell mode. There we go. But there was no way I was going to risk opening a bet just ahead of the 9:30 release. That would have been sheer madness. However, other traders did, and to me this strengthened the case for a short bet, as it smacked of a lot of long positions, more nervous about the fall in sterling than missing the next leg up. Just before the GDP release, cable dropped to 166.15, and this set up an opportunity in either direction. If the data was really poor, I'd still sell the pound, but if it was okay, then I could use the setback to go long up to 167. The question of where to place my stop was straightforward, whichever trade I took. If I sold sterling, my stop would be at 166.75, 20 pips above the 21 period moving average. If I bought sterling, my stop would be 30 pips below my entry price. However, any limit orders were going to be trickier. I figured that if the numbers were strong enough to warrant a buy bet, then 167 would be in traders' sights. In that case, I'd go with the flow, only taking profits if the technicals showed a loss of momentum. If I opened a sell bet against the prevailing trend, I'd look to take 30 pips profit on part of my trade and run the balance with a stop loss at break even. So, which trade did I go with? The squawk shrieked out at UK GDP minus 0.4. Yes, minus 0.4. I hit the button immediately, selling £5 at 166.03. And to be honest, I was relieved and impressed to be able to fill at that level. There we go. Bang up there. The collapse in sterling was instant, so I didn't get a chance to mess it up with the limit order at all. Instead, I settled for buying back £2 at 165.03, bringing my stop loss down to break even. I used a trailing stop loss to follow the market down during the morning, but closed the trade when the price broke above the 21 period moving average. By that time, the RSI and the MACD had turned positive, so with the weekend approaching, I was happy to pocket my winnings. So show you where that was. Down there. I made 100 pips on £2 and 211 pips on £3 for an overall gain of £833. That should buy a few pasties and Bath tomorrow. Have a good weekend.